typically what market participants want is certainty of delivery and certainty of payment. So what means is that if I'm a buyer of shares, I want to make sure that the shares get to me. If I'm a seller of shares, I want to make sure that the cash gets to me. In Nigeria, we at the CSCS operate a DVP, which means delivery versus payment, albeit that there's a small difference between when shares move and when cash moves, which is because of the R3GCS system that we have. But certainly, that is what everybody's looking for. So, which is certainty of payment, certainty of delivery of shares. And good enough for us in Nigeria, we actually operate that system. And so, it's almost nearly risk-free, if you like, from the context of participants.
All right, then. So what does this mean for you? And then how does this trickle down to the average person who trades on shares in Nigeria? So
what you are certain of is that anytime you buy your shares, you will get the shares. Anytime you sell your shares, you get your cash. And that is just the direct meaning for individuals. And what risk do you carry by operating in the market in terms of whether you're going to get your shares or not? You're actually carrying the CBN risk from a cash perspective, and you're carrying the CSCS risk from a delivery of shares perspective. But because we keep the register of the shares, we are able to transfer from one party to the other, and so the certainty remains at nearly or at 100% in terms of risk cover. Yeah.
All right, then. But I'd like you to talk me through some of the key areas that was focused on in this assessment.
So one was our internal processes, two was our risk management capabilities, and three was our ability to continue to do business in terms of what they look at from time to time. In our internal processes, they've looked at how we reconcile between us and registrars, how the connection between us and the stock exchange from a trading perspective, and also how we settle cash with the settlement banks. And all in all, they've seen improvement from their last rating to date in those three processes from an internal perspective. So they've seen that we've improved in terms of our SOPs. We've seen that we improved in terms of our time of delivery in terms of services. They've also seen that we've improved from our settlement finality when it comes to settlement banks to brokers. So that's one aspect. The second aspect is our ability to continue to do business. From a liquidity perspective, we're well capitalized. We have significant cash reserves that will cover for any eventuality that will cost to us.
So earlier you were just talking about your recertification and what that means for the standards means for your company.
So as we begin to automate, as we begin to connect to third parties, as we begin to allow multiple participants to have access to our assets technologically, one of the risks that we carry is that the links that they have with us can be compromised, or they themselves, when their own assets are compromised, can finally affect us. So we have gone for the certification or recertification to ensure that at least the standards that we have are best practices and at least can protect our market from a risk perspective in terms of technology. So that ISO certification was recertified again for us. And again, like I said, it actually helped in increasing our rating from A to A+.
All right, but beyond the certification and technology, I'd like to know what other initiatives you're putting in place to check fraud in that system.
So, for example, today, if you walk into the CSCS, if you want your statement to be printed, we have moved on from the ordinary paper that we issue you. We now have a security paper, just like your bank checkbooks. So it's like a security paper that when you print out the statement, you can take it to the bank and the bank can see that this paper is actually original. So the days of photocopying or going to go and amend those things are far gone. From a internal process perspective, we have put measures significantly in place from how you interface with us, the kind of background checks we do, the verification we do when we onboard clients through brokers via BVN, and all of those issues. So those are processes, again, we put in place to ensure that we identify who is doing a trade from beginning to the end, and doesn't give room for anybody to come and impersonate others in order to take their shares or take their money.
All right, but I'd like you to speak on your proof of concept, the completion of your proof of concept, and how you're using blockchain technology.
So that one is an interesting one. We took a look at the buzz around blockchain technology, and how the world is likely to move towards that, especially from the capital market perspective. So with our partners in terms of technology, which is TCS, we actually did a POC with Standard Bank and Stanbic locally here. with ourselves and one or two registrars. I think AP registrars is one of them, FBN, to test announcements using blockchain. So we passed through an announcement, and it was tested along all the nodes that we put in place, real time, all the time, and that has been very successful. Why do we take it from that? So we would start engaging market participants, the regulators, and also partner with the NSC to begin to see how we can take the next POC to the next level. As you all know, blockchain is where the world is talking about, or what it's talking about, and probably we're likely to see the first capital market exchange actually going to blockchain with this Australian stock exchange, and we're watching them.
All right then, but what are your projections for the market going forward then?
I'm a market infrastructure. If I put my investment experience back in the day, I would say we are seeing a market that is looking at multiple things. One is the growth in the economy. Two is the performances of the companies that we have in the market, and what kind of growth trajectory they're looking at. With inflation coming down and we're seeing rates coming down, they should see an increased level of lower borrowings, and so that should help their cash flows in terms of the companies. And we're seeing if the projections by the World Bank and other agencies around Nigeria's economic growth comes, we're likely to begin to see some recovery in the market, albeit slower than people expected. But certainly, with a buoyant economy that's likely to grow, if all the things are being said, we should see improvement in earnings for those companies, and by extension should see more value being created in the market.